Sometimes when we go into a Fed rate decision, the market's not sure exactly what it's going to get, and we can see some wild volatility. Yesterday, the market was expecting 1.25% rate cut, and that's exactly what it got. So what really becomes more important is what the outlook is moving forward. And we have a lot of interesting things to unpack here. When we look at the chart above for next June, the market is essentially moved a little bit more towards one rate cut and a little bit more towards two rate cuts, like 3 or 4%. It didn't really move very much. And the reason for that is there was some confusion amongst the governors themselves. We had the largest dissenting group that we've seen since 2019. Two governors didn't want to cut at all, and one governor wanted a double cut going into this meeting. So there's a little bit of confusion there. When we take a look at the data that Powell laid out, he thinks the economy is on good footing. We're going to see a GDP increase to 2.3% from 1.7%, which is good, but also has concerns with the labor market. He says they're in a good position to kind of stay pat and see what happens moving forward, but at the same point in time, they're also going to be repurchasing treasuries. We're going to see $40 billion worth of treasuries get rebought here, and the market did like that. We have dovish comments, the economy looks strong, we got a cut, and subsequently the S&P went up about 0.75%. We're really going to need to pay very close attention to the economic data moving forward because with the dissenting governors and a little bit of confusion there, those data points are going to be very important in order to determine what the next decision is out of the Fed. We will certainly keep you posted, but for now, we're at 3.5 to 3.75% from the Fed funds rate. It looks like we're not going to get a cut probably in January, and when we move out towards the middle of next year, we should see one or two more cuts based on where we're currently at. We will certainly keep you posted because what the Fed does is arguably the most important thing that we pay attention to because they control the money supply, and it has a massive impact across everything in the overall economy.